Good morning. This is Tampa Home Talk, and I'm your host, Katrina Madewell. Welcome this dreary, gloomy, rainy Friday morning.
I think it's going to bring in the first cold wave of the season. I'm loving it. I won't have to run my AC all weekend.
Leo, I thought you were going to be late this morning.
I arrived with 2.5 minutes to spare.
Did you now? Yeah, barely. Well, you got the live video feed kicking. We're doing great.
Yeah, I mean, it was traffic and weather that almost had me stalled. I should have listened to Pat George on the way in.
Yes, you should have. Hey, Pat.
Yes, you should have.
This'll get you. Adam Talley, remember he was in the studio a couple weeks ago?
Uh-huh.
He is going to be our new official show partner of Tampa Home Talk for the insurance space. So you're going to hear from him regularly. And guess where he is right now?
Probably on the other side of the table from where you're at.
Nope. Think again. It's somewhere you wish you were.
Oh, I know. He's on a cruise.
Guess which one?
He's probably on the Paradise on his way to Cozumel.
Nope. You're getting closer.
Brilliance of the Seas.
You got it.
Well, he went 2 weeks earlier than we did.
I know. I said you should postpone that a couple weeks. You might have more fun.
Yeah. Hey, I got to tell everybody, you need to go to Facebook on Katrina Jasper Madewell is live now. You need to go there because she is one heck of a good-looking pumpkin.
Yeah, I've got my orange shirt on today with my black hat.
You got orange everywhere.
My hair, my shirt, everything, right? All right. So without further ado, let's roll on over to our additional partner for the show, Miss Sarah Crickey at the mortgage firm. Welcome back.
Good morning, everybody.
And thank you for joining us again. She's always got some great stuff around credit. And we haven't heard from you in a while, but Miss Laurie Zoock. Welcome.
Back. Thanks for having me, Katrina.
She's been on Tampa Home Talk a number of times and has done radio herself over the years and is always a wealth of knowledge with regards to credit. And so, you may listen to Tampa Home Talk off and on. You may have been a listener since the beginning. This may be your first time ever catching this show. But the mission of our show, and we say this almost every week, is to help you maintain great credit, live within your means, build wealth, and talk about anything that will make your everyday life better. And so today's particular topic is going to be how to max out that credit score. Like, how can we get that score as high as possible and why it matters? And we were chatting about this a little bit before the show on how if Adam was here, he would chime in on how even your credit score matters in the insurance rate that you get.
Wow,
your premium's higher. Yeah.
Wow.
If your score is low, your premium will be higher.
I guess it makes sense. You're more of a risk. Isn't he writing the insurance on this building that we're sitting in?
He is. As a matter of fact, Adam just rewrote the policy on the building where we're at right now for Tampa Home Talk, and he came in quite a bit cheaper with way better coverage, including cyber coverage.
Ooh, what percent? We need the cyber coverage since we have all this fancy telecommunications equipment.
We're going to have to talk. I think we need to do a whole show on cyber coverage because that's literally like, Sarah, you can chime in on this. Like, we used to be so helpful in this space and give people wiring instructions so they knew right where to send their money. And there's so many things that we do for our customers to make it easier. And this is one thing we're like, whoop, we can't do it anymore.
And we had to stop. Yep. We have title companies send directly to the client via secure mail wiring instructions now, and then we instruct the client to call the title company back and verify all of the information. There's just been too many scenarios where email is intercepted. You take the lowercase letter L and change it to a I, and no one notices it in an email address, and boom, their money is wired into outer space.
These cyber criminals, they're sneaky because what they do is they'll hack into someone's email, right? Mm-hmm. Whether it's the agent or title or mortgage or whoever, and they'll sit and watch a transaction.
Correct.
And as soon as they see wiring instructions go, they will say, oh, by the way, sorry, we closed that escrow account. We don't actually use that one anymore. And so if the buyer unwillingly knows that they've now sent this to the wrong place, if they don't yank that wire back in time, they're probably not getting that money back.
And it's happened a lot. So.
And these crimes, unfortunately, they're investigated by the FBI, and you know how high that is on their priority list.
They don't have enough people. I actually did a show on this with someone I know who lost their money, $135,000, because the website for the realtor was hacked. Their email was hacked. And so it appeared that it was coming from the title company, and it wasn't.
$130,000.
$135,000.
Wow.
Went to closing, and they said, well, where's the money? And she said, well, I wired it. Nope. It turned out the FBI did investigate it, and it went to Nigeria.
So-
and they didn't get that back, did they?
Didn't get it back.
Well, so my paranoia of when I get wiring instructions, calling the title company and making them reread the numbers to me isn't
No,
over
that
the
you
top
should
paranoia.
do that.
That's
no.
what I'm always scared of.
We
wires.
we always, like, one of the things we do in the initial consultation when we sit down is we tell buyers, look, when you drop off your escrow check, which is about 1% of your purchase price, right? So if it's a $300,000 property, they might drop off a $3,000 or a $5,000 escrow check. So wherever they're dropping that off is the same place they're going to be closing, almost always, 99.9% of the time. So we tell them, when you go in there, pick up a paper copy of your wiring instructions, just a paper copy. Then when title later sends you this encrypted email, you can verify this with the paper copy. And then I still would call behind it, Leo.
Yeah.
There's nothing wrong with calling behind it and verifying, re-verifying. So, off on another topic, but we'll definitely, that's cyber security, cyber theft, that sort of stuff. So, like, for example, if the agent got hacked, they might turn around and try to sue the agent or sue title. And I know some attorneys that were in the middle of this that actually closed deals and were like, I'm out. Like, I don't even want to do title anymore.
Does title insurance cover something like that?
No. Title insurance only picks up defects on title.
Oh, wow.
Yeah, they didn't get the money. They're like, if you're buying something and you never gave me the money, how's that a claim? I never had it. So that's their course. That's their point on it.
Can you bring a cashier's check a few days before as opposed to doing it? No.
They will not even take cashier's checks anymore because of the amount of fraud.
They moved to wires because there was so much fraud with cashier's checks.
And then they figured out how to hack in
and then they
email.
Correct. They figured out how to hack into email. So now you have to secure the wiring instructions. It's a layer after layer.
Yeah. I mean,
on
these
for
cyber
years.
criminals get smarter and smarter and smarter. So, well, let's jump in a little bit to credit because there's so many things, right, that people don't even know that they don't know, right? And Lori, you've been in this space for how many years?
Over 12.
And so you're a little bit different. You're not a credit repair company.
Correct.
You're a credit education and consulting company.
Right. What I do is I actually help clients to do it. I provide them with the information. They work with me in tandem. I explain everything so they understand it. A credit repair company typically claims to do it for you. You don't see any of the letters. You don't know what's going out on your behalf. They typically only deal with the credit bureaus. I want the clients to understand how it actually works because I don't want to get a phone call after they get into the house and go, hey, my credit dropped 200 points. They didn't learn anything, and now it's going to affect everything. Auto insurance,
Yeah.
and any kind of insurance. In some cases, their jobs. It affects everything.
Well, I will say, like, qualifying for the home is the hardest part.
That's great.
Right, Sarah? I mean, that's like there's so many layers that you guys deal with on a day-to-day basis. And as many of you know that listen to the show, I used to do that job, so I know in depth what those layers are. And there are even more layers now than there was when I did it since the housing collapse.
That's right.
That reminds me, I was watching the new season of Daredevil, and there was a scene at the beginning where one of the employees working for the FBI couldn't get a performance review because his credit score was below 600. And if they gave him a performance review, he would have been fired as a security risk. So does stuff like that really happen?
It still happens, yeah. Police departments also. So I'll get police officers, people in the military, that kind of thing. Yep, they're looking at their responsibility.
We've had clients that are in the military tag on to what you're saying, and depending on their security clearance, right, on a federal level, determines, like, we had, of course, back in the day, many people had short sales and different things. There was one gentleman that's actually, he's been a client several times over. He's actually repurchased since. But I remember him, he got in a major car accident and then was in the middle of a divorce. Like, everything that could happen at once happened to him. Well, he was military and had a very high level of security clearance. And so he absolutely positively could not have a short sale or like a negative reporting on his credit bureau. So we had, and it was a short sale, but it was a very delicate way that we had to do it. So there couldn't be any deficiency judgment or anything like that. So there's many instances where that's the case. But, you know, for the everyday lay person, it may just affect what you pay for some of those necessary items like insurance and that sort of stuff. Number one at the list, though, really, to watch these credit scores. And Sarah, I know you brought in some examples, and we're going to talk a little bit about that after the break. But the very first thing at the top of the list that can have a significant impact. You know what? I'm not going to do that. I'm going to go the opposite way. Never mind. I'm going to leave number one, the very first, the biggest thing, because we've seen this impact the score as much as 100 points.
Correct.
we're going to go the other way around.
Okay.
We'll leave that last towards the end of the show because we want you guys to listen to the whole thing. We got a bunch of little nuggets, and we're going to talk about that when we come back. So at the top of our list is don't obsess. Like, we'll work through those details and go through it. Lori's going to run you through some of those things, and we'll talk about the differences in Credit Karma compared to your actual score that Sarah will pull, and so much more when we come back on Tampa Home Talk. Listen, if you want to check out your score, we can do that for you. Give us a call, 813-377-2775. We're going to give you real scores with real numbers, 813-377-2775. Good morning. This is Tampa Home Talk, and welcome back. I'm your host, Katrina Madewell. And just in case you have a question or you want to check out your score, our off-air number is 813-377-2775. You can call or text that number, which is 813-377-2775. And if you want to hook up with myself, not literally, but for a real estate purpose, or any one of my guests, some of them might want to be hooked up. I'll let you know, and you can give us a call. We'll be happy to get you connected. Leo, do you want to be hooked up? Just inspections, right?
Just inspections, permit closures, structural inspections. I'm really curious about these. This is my good distraction. What are these coming soons?
Okay, so we'll give you one little teaser. We got one coming live. This is the one on Sky Lake Circle, 27422 Sky Lake Circle, Wesley Chapel. This is right by Wiregrass Mall. This thing's going to fly. Literally going to fly off the shelf. 3-bedroom, 2-bath, almost 1,700 square foot, just $235. Brand new roof. Excellent home.
What about this one? This one looks really affordable, number 4.
That one's not yet live, but it will be very, very soon, likely by the time we're on the air next week.
Oh, I have to hold off on that one?
Well, we'll talk about it.
160 looks like a great price.
So 4407 Venice Drive. It's in Lake Pageant Estates East. It's only 3-bedroom, 2-bath, 1,200 square feet, 160. And I think I met with a client yesterday that wants that house.
Is it my imagination, or are these listings becoming more affordable? Like, I'm used to seeing...
It's timing.
Timing, because
you're seeing more inventory come on the market. That's what you're seeing.
Because it was weird, because before when we did the show, everything was like $350, $450, $500. I couldn't imagine a home that someone in this room, not myself, could pay cash for it, like $160 or $200.
So they have to, the bigger ones have to price where they will move, and that's what we've seen. A lot of those ones we had on the list before have sold. They're gone. And then the new ones entering the market now, a lot of these have had renters in it. So they're now reentering the market. That's what's changing our absorption rate, which is right on time, not to get off track, Sarah, but like rates, oh my gosh, they've moved like a full 1% in a month, right?
Yeah.
At least?
It's sticker shock for a lot of clients that were used to 3.5%.
Yeah.
Under 4% rates.
So I tell you what, if you're a renter and your landlord gave you notice, now's the time to jump in. Yeah. Don't wait. When I bought my first house, I think my rate was like 7.5%.
And aside from the fact that the rates have moved, credit score has a big impact on that.
Yes, it does.
Can I ask I got a quick question. So this rate change, I've gone up a point. Let's say I have a standard $250,000 mortgage. Mm-hmm. Over the course of the mortgage life, what does 1 point mean in the amount of money I'm paying per month?
Well, it's a little bit of a loaded question, because you're asking me if you would stay in your mortgage for the full 30 years, never overpaying it, never changing anything about it, and pay it out to the end.
Yeah, well, I mean, like my monthly payment, just changing 1 point on a $300,000 mortgage, what is that increase going to be? I always ask the tough engineering questions.
We'll answer that for sure, but it's a difference of what? I would say $100 or so. 1% increase in the rate?
I think you're asking about interest over time.
No, I'm just asking monthly.
How much will it change the payment?
Yeah.
Oh, about $100.
Oh, yeah. So it's not as scary as everyone thinks.
Yeah, no. But I was thinking that you were asking about compounded interest over the life of the
loan.
loan.
No, I would love that question answered,
but
that's my kind of question.
I need a computer for that one.
No, I want something that the listening audience can calculate while driving. Just a $100 a month difference.
Yeah. Leo, here's what I would always do when I did loans, and I know Sarah's done this for some of our customers too.
Right.
You should never, ever, ever even think about refinancing without calculating what your break-even point is.
Sure.
It doesn't matter if that rate is moving 0.5%, 1%, 2%, right? Because the smaller the loan amount, like the bigger the loan amount, the less that number has to be.
Correct.
But you got to look at it to see where and when it makes sense. If you know you could possibly move in 2 years, don't refinance.
Right.
I mean, I've got a customer right now that just refinanced.
And I talk about that with the client. I need to understand what their long-term goals are. But on the other side of the coin,
or even what you think.
Correct.
Right.
Because I'll if they're thinking of selling, don't refi.
Don't do it.
You might want to wait. But then on the other side of the coin as the lender, we're going to look at what is the net tangible benefit. We're not going to do a refinance if it doesn't make sense financially.
Back when I did loans, they never did that. Like, we had to do that.
We want to see the break even on the closing costs being rolled in the loan. Where's the break even on that, where you're really truly saving money? And so we have a guideline for that as well.
Now, can you do that now sometimes, credit, or sometimes, Sarah, where you issue like a lender credit and there's little or almost no cost and it's just a reduction to the rate pretty much?
Until rates moved, we were able to give a lot more in terms of lender credit.
So that's going to settle back out.
But the gap has closed there a lot since the market's gone up. There's not a ton of wiggle room on the rate sheet to offer credit.
So that has to do with secondary pricing, which is a little bit complex. But anyway, it's just how they calculate.
This is already confusing me enough. I mean, credit's confusing to me because I've been told I'm a ghost when it comes to credit. So I want to learn how to make my score go up.
So you have no score?
I don't own anything.
So you don't use credit for anything?
No, I have credit, but I don't own a car. I don't own a house. I don't own anything. And I haven't had a loan on anything in years.
So you don't have a score?
I guess. My score is dismal.
We can show you how to pop a score.
My score is dismal. The only thing I have is my Discover credit card that I've had for 20 years.
Then is it in your business name or your name?
No, that card is in my name, but everything else is in a business name.
Do you use it?
The Discover card, yeah.
Then you have a score.
Yeah.
Oh.
You have a score.
I've been told it's horrible.
No way. Something's wrong. We can look at that.
Yeah.
I don't know.
And if you want us to look at credit and figure out what's wrong, we can do that at 813-377-2775. Just give us a call. We'll get it checked out. So one of the biggest things that impacts people is paying bills on time. Like that's a big thing. And I have to say for myself, I never wanted to carry a balance. And so sometimes just in the craziness of life, I might actually miss, a payment or pay it late. Not to where it would impact the credit score, but some people it does, right? If you're over 30 days, it's going to impact it. Set everything up on minimum payment, and then pay that when you get a chance to open your mail or however you do it. Don't you agree?
Well, I'll give you a little tip on that because I pay everything off, but I don't wait the 30 days for the bill to come in. I make at least 2 payments a month. If you make a payment every other week, you will never have a late payment.
Oh, good tip, Lori.
Easy one.
I love that.
Good tip. So, and does it matter if that covers your minimum or no?
Well, you have to cover the minimum, but if you have a balance, obviously you really want to pay it off because if most people don't look at their statements, which do now show what interest rate you paid for that month, you want to know what you're paying. If you don't know what you're paying, this is why people work 2 and 3 jobs.
If you think mortgage rates are high, Sarah, look at the rates on those credit cards.
Yeah, 20, 25%, sometimes higher.
I can't believe people really pay that. Like, I just can't believe it.
No, but if you have a long-time credit card like you do, I have long-time credit cards. My interest rates are probably, I believe right now, about 7 and 8%. But I've had those 2 cards for 15 years, no mispayment, pay them off.
And they kept the rate the same?
They kept the rates the same.
Wow.
Never changed them.
Wow. Yeah, I just pay it off every month, so I don't even know what the rate is.
So some of the questions we're getting is, how come my credit karma score is so much different than the score on my credit report?
What is Credit Karma?
Credit Karma is like the app, the free app, which, by the way, when you do that, it's free to you, but somebody's paying to get that data, just so you know.
Right. Well, Credit Karma was actually Credit Karma uses Vantage scores, not FICO scores. 2 different things. So the number one call I get when a client calls me is, oh, my Credit Karma said I had a 600 score, but my mortgage person said I had a 550. So Credit Karma inflates the score under Vantage as compared to FICO. So people don't understand that it's 2 separate scoring models. That site is free because what they try to do, Credit Karma, is get you to open, close, balance transfer, do different things on your credit cards, all of which can actually affect your credit. Because if you're applying for credit, you're going to get a hard hit inquiry.
Right.
If you close out an account, you're going to lose points on that. So that site, they get paid by how many people click on the different sites and open up credit cards or balance transfer.
Crazy? The world
Plus, right, and it doesn't show Experian. So if a creditor or a collector only reports to Experian, how are you going to see that? You're not going to see it on Credit Karma. So I personally don't. I have it so I can see what happens, but I would never use that to judge because the majority of companies are going to use FICO scores.
So, Sarah, you get this call on a daily basis.
I do. Whenever someone is applying for a mortgage with any lender, the lender's going to pull what's called a tri-merge credit report. So that's going to be all 3 bureaus on one file: Experian, TransUnion, and Equifax. They're typically going to base the approval, the interest rate, and the structure on that loan on the middle of the 3 credit scores. And so I get it all the time. My Credit Karma 660, I'll pull it. Sometimes it's a little higher. A lot of times it's lower.
Right. Yeah, I've seen that swing as much as 100 points.
Yeah, and we use FICO, and the thing is, again, we were talking about different algorithms. The purpose that I'm pulling the credit has to do with the score return that I'm getting.
Yeah.
Equifax, for example, is a good example. They're a major retail repository. A lot of people use Equifax. You could walk in a car dealership to purchase a vehicle. They'll pull an Equifax report and get a completely different score than my Equifax score.
Right. Right.
So, yeah.
Again, those algorithms are totally, totally different. And, I know a lot of people that listen to the station, listen to Dave Ramsey. They love Dave, as do we. As many of you know, I am an endorsed local provider. We're now allowed to say that and advertise that. We weren't before, but we've changed our contract. We pay for that, but that's okay. Dave doesn't have a score. And so what I will tell you is, he's got a lot of money, like millions. But for most people, if you don't have a score, that will impact your insurance rates. Correct. You have to go to a manual underwrite. You can get a loan, but you're looking at a manual underwrite. We could tell you a couple little simple tips.
And worse than pricing. Correct.
Yeah. And then you don't have to keep it forever. Close it as soon as you get a mortgage payment. A mortgage account open. Close it. You don't need it. Yeah. Lori, real quick question before we run to the break. One of the questions we had was, how does paying your credit card bill every other week affect your score?
Paying it every other week affect your score?
Like
well, your score your score can actually go up and down daily depending upon when things update to the company first, when you pay the creditor, and then there are different updates for each of the 3 credit bureaus. So it can vary daily.
Right, and they pull at different times.
5 seconds.
As I mentioned, different reports as well for different places. This is Tampa Home Talk. We'll be back in just a minute. Welcome back. This is Tampa Home Talk. I'm your host, Katrina Madewell. Leo Cannyn kicking it in the studio with us as well. Sarah Crickey and Laurie Zoock. Welcome back to our credit edition of Tampa Home Talk. And so if you missed the earlier part of the show, by the way, all of our shows roll to a podcast. They're all on a video, and we live stream everything on Facebook. So you can catch it in any way that you choose, but definitely listen to it. And I know for a fact that this show will help somebody. So someone that's trying to figure out those little nuances of how to increase that credit score.
Can I ask a math question?
Get it over to them.
Please.
Is it directed to Sarah or me?
Oh, no, it's directed to Lori.
Oh, no. Okay. Shoot.
Okay, so I have a Target credit card with a $500 limit that I use once a month. And then I also, in a different state, have a Chase credit card with a $1,000 limit that I use twice a month. I leave $1 balance on both cards, and I pay off the rest. How will that affect my credit score over the course of a 6-year period?
Whoa, that's a great question. Well,
I might want to repeat that.
That's right. I can pretty much answer that.
I just made it up.
You read a lot of things if you go online that say how much, like stay under 30% on your credit cards and your score will be up. Stay
used
under
to be
20,
true.
25. No. And $1 is fine. I usually tell people like the $5 to $10 range. It depends upon what the available limit is. So you want to only owe like a few bucks. Now, you only want to owe a few bucks if you want to boost your FICO score a few extra points, like if you're going to buy a house. Otherwise, just pay it off because it really doesn't matter at that point. You're not using it for a loan and you don't want to pay any interest even on $1. But again, about 60 days before you apply for a home, get that balance down. It's like $5. That's what I tell people, $5. That will give you that few extra points, and that could put you over into the next program because they qualify you out by that mid score. So it could kick you up a few extra points.
It's funny that you asked that question because we do this all the time, and Sarah runs simulations like every day. So that simulators tell them, okay, when you pull this credit report, if you change this, how does it impact the score? And you'd be surprised how often a $10 balance makes a significant impact on the score. And you brought some examples of that same thing, didn't you?
It makes a big difference versus a zero balance. You'd be surprised. You're giving the bureau something to review versus just leaving it a zero balance, and it makes a big difference on my end.
Right.
So here's some examples right here. We pulled a bureau, and it says change the balance to $600 on this account, and it's going to require a $936 payment. Another one says pay the balance down to $10, only paying $261. It's going to change his credit score from 611 to 667.
A bunch of words I can't say on the air right now that I want to say.
Look at this one. Here's another one. A 527 score is going to go to 620.
660.
I'm sorry. Yeah, 660. And look at this. This is by deleting some of the things that are on there.
So in this particular scenario, the borrower actually has an open, perfectly paid mortgage. and a car loan that's been perfectly paid, what you're looking at in terms of deletion are medical collections. And a lot of people think, and this is just in my experience, that paying a medical collection to zero is the best possible disposition of that account.
So glad you brought that up, because that's totally on our list.
Yeah, and so what happens is in some cases it's okay if it's really not impacting the score. But more than not, you're refreshing a bad debt when you do that.
So do not pay off those old collections
So we
without getting some help on that.
And we're not a credit repair company either. However, when we pull a credit file, if we're a few points away, we've got those really cool tools called a what if simulator. We can hop in each respective bureau, play around with accounts hypothetically, so that it's not as much of a guessing game for the client to grab those extra points that are needed.
Yeah, because it used to be that we would tell them what we thought it was, right?
Right,
like
right,
Lori.
right.
And then you'd have to wait for that credit bureau to cycle 30 days and
Right.
then see where you land.
Well, and
now
I have a client coming over now that is coming from another lender, and they said, well, pay your medical collections off, and then we'll wait 30 days, and we'll see where you land. And I'm like, you might be hurting yourself here. So
And what happened when you checked it with the simulator?
It's what you're looking at.
Oh, this one.
This is what you're looking at. And so we always start the path of least resistance. What's the least expensive way to grab a few points, etc.? All of these collections, by the way, these medical collections are a couple $100. The client was actually able to call the creditor and negotiate a reduction in the amount. So they settled for less, and they basically told the creditor, I'm willing to settle, but you need to be willing to delete. And so, that's a scenario where it's 5 or 6. A lot of times we can accomplish it with 1 or 2 things. It's
Right.
just different from one customer to the next.
This we see a lot, Leo, where you add a new credit card with a $300 limit. A lot of times it's even a secured credit card, and you have a $10 balance. It can change the score by 50, 60
Exactly.
points,
I
sometimes
need
more.
one of these.
Yeah.
Yeah, well, they pay a lot of money to do this stuff.
Yeah.
So
Oh, if I
you-
wanted to
Right.
find out more information,
You can call us at 813-377-2775. We'll get you connected with the mortgage firm, Miss Sarah Crickey, and you can call or text. You can text credit if you would like to 813-377-2775, and we'll get you guys connected. But that's a big misconception. And, how a loan officer told somebody to pay off old collections and come back and let's see, that's ridiculous.
Well, there are some loan officers that don't know what they're doing. I hate to say that because I'll get the same thing. I work with pretty much a select group of mortgage people. They're all basically trained at this point to say, you better call Lori before you do any of that, because if you make a mistake and you pay off all those collections, people think, hey, I'm doing a good thing. It's zeroing out the
Right.
score, and therefore my scores will go up. What they don't know is that in the FICO scoring model, the old date of the debt comes current to today when you
Right.
paid it, and it is the bomb. And so it's tearful for me to have to explain to somebody
Yeah.
who's already made that mistake, because then it becomes very difficult to negotiate once they've paid off.
And the credit score algorithms are pretty complex. Nobody really knows what they are, but to simplify it as simple as it can be, let's say you have an old collection, and maybe it's an old medical collection, and it's $300. You forgot about it, but it's from 5 or 6 years ago, Leo, and it's just sitting out there hanging. You never really even realized it was there. Maybe you never got any mail. That happens a lot. And so now you think, oh, I want to buy a house. Let me run out and pay this $300 collection or whatever it is. But what happens is the credit bureau, instead of reading, oh, you got a really old medical collection you didn't pay, it now reads, oh, you got a bad debt. You just paid it off. So that's what Lori's talking about. They refresh that data last activity. There's a little thing on the credit report that says DLA, and it stands for data last activity. And so that's recent use.
Right.
How recently did you use that account? So it looks like you got a current bad debt
Right.
that you just paid off.
so you have to ask them to delete it.
You do, but usually in my case, my clients send out letters, and I'm looking for leverage in mistakes and errors in the credit reporting, something they've done wrong to use as leverage, and then I teach the clients how to negotiate it so they sound like they know what they're talking about, because they're on a recorded line, and once you call up, if you don't know what you're doing, you've just admitted to that debt. So that's part of it. Typically, I find that collections, just showing up on your report, can be 30 to 100 point hit. If you make a late mortgage payment, FICO says 1 to 200 point hit.
Oh, I'm sure.
So they're huge hits when you just pay it off. The other thing you have to consider is the statute of limitations in your state for collection. So here in Florida, there's a 5-year statute of limitations from the date you initially defaulted, unless you started paying it again and then defaulted again, that becomes the new date. So if it's a 6-year-old debt, you have a pretty good chance of getting it negotiated off, because now the collector legally can't sue you for that debt.
Right.
However,
So it's good. It's
Yeah.
money they've already written off, but they get it. It's free
right.
money.
But also, there's a 7-year statutory limit to credit reporting on non-governmental debt. So if that collection is some type of non-governmental debt, credit card, car, whatever it is, and it passed that 7-year from the initial date of delinquency, it is not collectible. And I have seen situations where we call it zombie debt. Collection companies will sell that debt off over and over and over for pennies on the dollar. And what they do is they re-age the debt. They make it look like it's a new debt, a new date.
So they're reporting this to your credit bureau, is
And
what
they
she's saying.
right, and they keep reporting and reporting.
Even
and
though they actually can't collect on it.
even though they actually, I just had a friend call me up and said he had an 18-year-old collection show up on his report.
Wow.
Now that could be a lawsuit right there because it can't report after the 7 years in that particular case. So if the debt is, if it's older than 7 years, you can just dispute that directly with the credit bureaus. But sometimes it's difficult because you have to get proof. Getting proof from the collection agencies is the difficult part. A lot of times they have no proof. So if you can't get proof from them and you know it's older, what do? In my case, I have clients complain to the Consumer Financial Protection Bureau, and typically it does get deleted if the collection agency won't do it. There's
if
so
you're
much involved.
If you're having some challenges, give us a call because Laurie does know the ins and outs of this. She works with many different attorneys that know the ins and outs of this as well when creditors actually break the law. So
Right.
you can call us at 813-377-2775. We'll get you connected with Laurie, Leo, Sarah, or myself. 813-377-2775. Sarah, were you going to say something about that late payment on the mortgage?
No, it's great information. What you
She
just
got
gave.
shivers. I saw her.
Well,
shiver
I
a little
mean,
bit.
because again, we're not a credit repair company, so we're looking for what's going to quickly fix the credit score. But
Right.
if the consumer has time to prepare, there is more than one way to get a negative trade off the bureau, and that's excellent information.
Thanks.
Yeah.
Right. I think the biggest thing, though, too, for you and me both is
Uh-huh.
people who are thinking about purchasing a home down the road. Do not wait until the last minute
Don't
to
wait,
pull your
yeah.
credit. That's the first thing you have to do.
We
Right.
tell people it's not too early to even start a year in advance. Even
Yeah.
if you just started a lease, do it now. That way you know that it's good. And then you can look at something like Credit Karma. It'll show you if there's any big swings. So you can just keep an eye on it.
Right, and you have to know what's on there. I mean, I've had clients call me up in a panic too, because what happens sometimes if you're charged off from a creditor and they're the collection agency, and you don't see the two things that are associated together, well, what does that tell me? It tells me that up until the date of closing, that collection might show up days before,
Yeah.
because these companies monitor your
Right.
report, and then it's a panic situation to try and get
Yeah.
that deleted off the report.
So, Sarah, how long does it typically take to clean up some of these credit issues? And then, Laurie, I'm going to ping it to you because usually, Sarah, when you get it and you got to do credit cleanup, we're in the middle of a contract and something just happened.
Or something just happened, or we're about to be in contract, and maybe we pre-qualified the client and everything looked great, and maybe it took them a while to find their home, and we're now under contract. We're looking at credit. Our credit's good for 4 months. Will that credit report carry us through the closing date? If not, we have to refresh. That's when we'll get a surprise a lot of the time. So unfortunately, at that point, it's like a firefighting situation.
So, give me an example of a surprise and tell me how long it took you to fix it.
Okay. Well, I got a client from another lender that was declining the loan because they couldn't make it work, that the score had fallen.
To how much? Do you know? About.
I want to say it fell about 40 points. It was a little medical collection that hit.
Was it low 600s, 5s? Or was
It was under 600, right?
Okay.
So, and this was actually the daughter of a realtor that I work with. So, she went on her own, got declined for a mortgage. They came to me and said, "What can we do?" So, simulated the credit, delete the medical account. It was about a 10-day turnaround, start to finish, including what's called a rapid rescore, which I can talk about.
which costs them dearly, but they will do it.
We will
which
do
is
it.
why they are our partner.
Yeah, and we pulled the score back over 660, closed the loan in probably 13 days. So it was a rock star file at the end there.
And so, Laurie, we'll answer the second half of that question when we come back after the break, when someone's not in a firefighting situation, meaning they're under contract or about to be, and they have to hurry up and fix something that just dropped on the credit like a bomb in a normal situation where they've got a little more time.
Yeah.
We'll
Right.
talk about how long that will take. Again, I'm Katrina Madewell. Our off-air number is 813-377-2775. We'll be back right after the break. Welcome back. This is Tampa Home Talk. I'm your host, Katrina Madewell, hanging in the studio with Leo Cannyn of Beryl Engineering and Inspections.
I love this show. So many numbers. I'm looking down at the sheet and I'm seeing so many numbers. Top 5 questions, $10, 40 points, 100 points, 3 twos,
His engineer brain is
1781.
on fire.
And you're about to reveal the number one tip to help raise my credit score.
The number one tip to help increase your credit score, as promised, is watch those credit card balances. It sounds so simple, but it's so big.
That sounds
Like
like
it's
a
such a
no-brainer.
big impact. Sarah, let's talk about this. How big of an impact do you see a score having, especially if it's just a little bit over the credit limit? At the credit limit, we're getting questions about the 30% mark. So when it's 30% of the balance, which really is like an old rule. Like it used to be 25, 30% of your credit line was a optimum score, and now we're not seeing that. So it's like a $10 rule, more than 30%. But how big is that going to impact the score?
It's going to be different, and I'm going to give you an example of 2 different consumers. Let's say I've maintained a perfect credit history. I've had an 800 credit score. I have depth in my credit over time for years. You know, the creditor gives you that balance to use, and for some folks, they use it. They get within 90%, 90% balance to limit, things like that. If they've got that type of a long-term proven track record,
With no late payments.
with no late payments, and I mean credit depth. I don't mean 1 or 2 accounts. I mean a history over decades.
Where they've had accounts for a long
Correct.
time.
That older consumer that's established that credit is going to have less of an impact on score than someone that's trying to recover from, say, some derogatory credit. I had a bankruptcy 2 years ago. I'm now able to reestablish. I don't have any negative credit since then. I'm opening a couple credit cards. You know, when you
by
raise,
the way, if you
yeah.
have a bankruptcy, the
Yeah.
number one thing you can do is run out and get a secured credit card.
Correct.
The second you're able to do that, and I
Correct.
know it's the last thing you want to hear.
Yeah.
We're not telling you max stuff out. We're telling you to improve your score.
Yeah.
So you can get back into life if you need to finance something.
Sure. And so for those folks that are recovering, like I say, or have thinner credit, are getting past prior issues, raising that balance to the limit is going to completely work against them. And while, it's always smart to pay your card off every month, I'm totally on the $10 rule. Because you're still giving the Bureau something to review.
She pays it off and just she uses
Right.
it in Uber, and she pays it off and then she uses it in Uber.
And I use it for Southwest points, So, but no, that's going to be the key for someone that's trying to reestablish, and it's going to keep the score as high as it can possibly get.
Right.
Got it.
Yeah.
So, Lori, the other half of that question, we were talking about how long does it take for
It
the
all-
credit, because your system's a little different, right?
It is. I have to actually, I work as an analyst first. I analyze all of their credit onto a spreadsheet. I send it to my client. We do a phone call. I ask them a million questions because there are certain things that I'm looking for that they have no clue, and not that they're really interested in, but I give them the cliff notes, so to speak,
Right.
on what their credit situation is. How long it takes.
Because every bureau you look at is different.
Right, because some companies only report to 1 or 2 and not all 3 bureaus. And some companies, like utility companies, only report negative credit. They don't report any positive credit. So it's kind of, I always describe it, it's like a Rubik's Cube that's perfectly colored on each side. And now it got messed up. Whatever happened, divorce, medical, whatever situation happened, it's all messed up. Some people mess it up themselves. I have to try to take what I see and put those Rubik's Cube colors back as close as possible. But the funny part is, people sometimes think it's really easy. I laugh. I read the ads for credit repair companies on Craigslist as entertainment, because they'll go, "Hey, we can fix your score in 30 days, in 10 days, in 5 days, and we'll get you 800 credit scores." And there are lots of illegal things that you can do to do it, and people do it, and they don't realize it's a felony.
So,
Like,
Lori, if somebody
yeah.
wants to analyze their credit, what would something like that cost? What does it cost you to do that?
For me, a typical average client is $125 a month, or $200 for a couple. How long it takes depends upon how quickly that client is willing to work.
What if they want to do it one time and just say, "Give me the short and skinny, I'll do everything
Sure,
myself."
I can give
Will you
them
do that for 'em?
yeah. I do an analysis of their credit report. I basically tell them what has to be done. The majority of people, though, are going to say, "I need help. I just, even if you're telling me what to do." A lot of it is time limitations for them. So if I can take an average client for me is probably 3 to 4 months. Once they have the gist of what it is that they have to do, most of them can continue on themselves. And I say, hey, you get stuck 5 months down the road, you're still having problems, come back. I'll just charge you for that month. We'll work together for that month and see if we can resolve those issues.
Right.
So it depends on what the client needs.
All right, so that sound means
Hey,
it's time
Pumpkin,
for
it's the trick-or-treaters at the front door.
our real estate tip of the day. Let me give you our offer number really quick in case you want to connect with Laurie Zoock. You can call or text us at 813-377-2775. Call or text 813-377-2775. So our real estate tip of the day, honestly, is don't wait till the last minute. Get this credit score checked out right away so that we know where you're at and we can prepare you if you want to buy, sell, or move up. And so let me run into a couple of the properties that we have because we got some brand new stuff. It's not on the market yet, Leo. So I told you about Sky Lake Drive right there in the Wiregrass area for $235. We also have Meadowlark Lane coming up in Palm Harbor. That one's going to be on really soon. That's got a pool for $300 in Palm Harbor.
Nice.
It's going to go quick, isn't
Nice.
it? You know it's going to go really fast.
I love the name of number 5. I just want to live on its street name.
And that one is actually beautiful. We'll talk about that one in a second.
Yeah.
So Ridgecrest Court in Palm Harbor is another one coming up. That's going to be a stellar deal. This is for a cash only buyer, $250. You and I had an inspection like this a little while back.
Cash only?
Cash
I
only.
love those.
Yeah, it's a little bit of a hoarder house, but there's
I
a
don't love
buyer for
those.
every one of those houses. So Venice Drive's coming up for $160. It's a 3-bedroom, 2-bath in Land O'Lakes, and then Oyster Shell Trail. That's the one you're
I
asking
know.
about.
Does that one come with a happy hour price?
So this is a huge one on the lake. Absolutely beautiful. Still house. 350,000.63 of an acre. And this is like if you're looking for a ski lake that you can go out and water ski on, jet ski on, have fun on, this might be your deal that you want to check out. So you can call me at our off-air number, 813-377-2775. We'll tell you about those or any others. And if you need my help to help get you moved in, moved out, or moved up, you can call us at 813-377-2775. Thoughts?
No, I love it. So many numbers. I'm going to be thinking about this during my next inspection, which conveniently my next inspection is a commercial building right across the street. So I'm very excited.
So I'm trying to get JoJo's attention because I want, while you're finishing up your thought, who's our guest next week? Is it Chris Hogan?
No, it's Christine here and Lauren Zoock.
Oh, so we got the best at Tampa Bay coming up next week.
Do we also have the aquarium coming up?
Soon. Chris Hogan's at the end of the month, right? In November? Okay. We have so many amazing shows coming up, Leo.
I'm so excited. Yeah, and the secret show, that's going to be a complete surprise.
Okay, stick around. This is our last show of October, but in November, we will not disappoint on any show scheduled in November. We are stacked with amazing stuff in November. Pat, you're going to see us in the actual Beasley studio in November.
With the McDonald's?
Yes, we'll have to bring Pat some food.
We will.
Lori, Sarah, thanks for being my guest.
Thank you
for having us.
Leo, as awesome. Love having you here. Love having you as a partner. He does a bang-up job on inspections. I'm just saying. That's why we use him. All right, remember, love where you live, or we're going to fix it. Welcome home.